Hello and welcome to another video by reitspro.com. And today's video could be extremely significant to you for as an investor if you want access to rental properties through capital markets, and if you have 10 lakh or more rupees to invest in properties, you want regular returns, and you want better liquidity and transparency vis-a-vis physical real estate. And fourthly, you seek SEBI's regulation protection also. So in that case, SEBI has just come out with something called the MSM REIT, Micro, Small and Medium REITs Regulations, an amendment on 8th of March to do that. And another beautiful feature of this whole regulation is the fact that there are separate schemes similar to mutual fund AMCs. So we'll cover all this in today's videos of what it means to you as investors interested in properties. So what is a REIT? Firstly, let's just recap that. So these are great stocks to get revenue generating assets, and they are listed and traded. And today we have 4 listed REITs which are given on the box below. When you buy commercial property and you want rental and appreciation both, what are those options? Let's first explore that. Bangalore, you wish to buy some properties in Bangalore and you want commercial real estate for that. Now, what are the options that are available to you? The first and the foremost is physically, you can go out and own directly. That's under direct ownership, and that is regulated by RERA. All the intermediaries is regulated by RERA. Secondly, you could go for fractional ownership, whereas there is no regulation. And thirdly, REITs. We'll explain this one by one. There is another category where you can also have exposure to real estate, which is through taking stocks of builder companies, but that would really not classify strictly as real estate. For example, Shova Developers, DLF, or Godrej Properties, and so on. 3 modes of investing you would have. In the first one, you could have many different things like the residential, commercial, industry, or vacant land also. The second one is tech-enabled portals like HBit, StrataProp, PropShare, and so on. And thirdly, REITs, they are Embassy REIT, Mindspace, Brookfield, and Nexus Retail. So these are all REITs that are listed here in India. Now let's get down to how you would really go about taking these properties. So let's say you are looking at direct ownership of properties. So the first thing is you could either book with developers like these, and you could also go for resale. For example, you could have these are listings on 99 acres. Go to your local brokers or agents, and then you can buy these properties, and you go to the registrar office and get them registered. That's as simple as that. So and there are other types like industrial or just a plot. So the gamut, the whole range is open to you when it comes to physical real estate. Now the second one is REITs, which are SEBI regulated, and we have 4 REITs today which are listed. So these are Mindspace, Brookfield, which is in offices, and Nexus REIT retail. So now, since we are looking at, say, something like a Bangalore market, then Embassy REIT probably suits very well there. So because they have about 75% of their assets based in Bangalore and they are listed on the stock exchange, you could buy them from the stock exchange itself as a normal equity share. So you could have exposure to the properties, their office spaces, and miscellaneous others in Bangalore. Now, the third one, which had hitherto been unregulated, was the unregulated part of fractional ownership of properties. So the fractional ownership of properties was something like this. So you would go onto a portal. For example, there's a snapshot here, and there is another snapshot here which tells you how it works. And so this was offered through several portals, but these would be unregulated largely by SEBI. The investors choose the model of FOP or fractional ownership of property because it's still a lesser ticket size compared to normal physical real estate investing, and higher returns are there, as well as there is diversification because you have wider choices. However, there are certain ambiguities like the tax treatment, how the management working is there, or the asset disclosures. Also, exit options are extremely limited, and periodic valuations are ambiguous in these cases. Also, the tax treatment. So therefore, a need to bring in a legislation. So what SEBI has done is, by this recent notification, it has got this portion of property investing into its fold to understand why it was needed. So May 2023 was the time when SEBI issued a consultation paper. In November 23, there was an approval, and in 24, the final notification has been given out. The background in that stated that there were mushrooming structures offering fractional ownership of shares, and these were structures, typically private companies, LLPs, and so on, which offered investment in real estate, and SEBI had already got a REIT regulation in place where 4 REITs had been listed as on 30th September. Further, what the consultation paper talked about, it displayed a structure which was currently a typical existing structure where if you see here, there was a private limited company which was an SPV, and the SPV would own the real estate asset and then issue securities. So if you see the labeling, part 1 is the SPV that was regulated by the Companies Act, the company structure. Then the second one is fractional ownership platform. So this was an intermediary with tech, and the third part was the real estate part, which is mentioned 3 as here. So this is the real estate part, and then the securities were issued, and this should actually be in the capital market domain, but SEBI had no control over that. So the SPVs issued unlisted securities to investors. So now if you look at this here again, so the Companies Act was involved, RERA was involved in case of intermediaries and the assets also, and these were limited in operation as far as the FOPs were concerned. The capital markets, so what SEBI has done is got this into its fold. Now, so what it has done is it's merged the current REIT guidelines by putting some additional clauses in the current guidelines. So in 2024 March Gazette, what it did was basically this whole structure has now got converted into a typical REIT structure, and it has extended the regulatory framework of REIT regulations to fractional ownership platforms. So what do these MSM REIT regulations say? So the first part is the size, which is 50 crores to 500 crores by a scheme. Number of investors again is 200. Minimum investment of or one lot, one unit would be rupees 10 lakhs. Then they would be tradable and listed, and asset categories they have not specified. Asset types basically have to be revenue generating, not under construction at all. And the distributions, the quarterly distributions are mandated. Again, valuations are to be done periodically, and major changes have to be also valued periodically. Then the leverage is maximum 49% with a base minimum of 25% for those MSM REITs which opt for this kind of a thing. So there are regulations regarding MSM REITs which can opt for leverage also, and they would be subject to certain guidelines. Now let's come on to the use case of the new amendments and a summary comparison. But just before that, I'd request everybody here who's watching this video to please subscribe to our videos and the channel, because it happens to be the only channel which is REIT and InvIT dedicated, and the first one of its type in India. And please visit our reitspro.com website also. You can have a look at 2 very nice books, and you can get hold of a lot of the resources which are available, including historical returns and so on public REITs as of now, as well as InvITs. What MSM REITs regulations intend to do, the investors can now pick and choose which asset to invest in. So now you've probably understood how the regulations have been structured. So now the REIT, for example, in the normal REITs that we have, there's an aggregation and each unit represents same asset ownership. Whereas in MSM units, each unit can represent different assets in SM REITs. So there'll be specific schemes that each scheme will invest in specific assets. And if you are to correlate the two, the November 23 snapshot where the SEBI paper was there. The SEBI paper for November 23 was there on the left-hand side. On the bottom is the final amendment, which was published in March 24. So you can see and compare what the scheme structure is like. The table, so there would be 3 or 4 major things that would be highlighted here, which are different. So if you see the minimum investment in MSM REITs is 10 lakh rupees, whereas in large REITs, you can own a unit at under 500 rupees today. Secondly, the asset categories are both not specified. Categories could be dramatically different in case of MSM REITs because of the scheme attributes. The third is the scheme types, the asset types and features. So both there are revenue generating majorly, but in case of large REITs, a minor part of be allowed and under construction can be allowed. And fourthly, in the MSM REITs, quarterly distributions is mandated. In large REITs, 6 monthly distributions are mandated. However, the REITs today are giving out returns payouts quarterly only. To sum it up, the avenues open up for higher returns and for diversity. As far as investing is concerned, for example, you could have holiday homes. So you could have a say an asset of 100 crores of holiday homes, which is now given to investors to invest in and take returns from there. And then specific managed assets requirement in portfolio can be met. So you could say, okay, I would like to have these kind of real estate assets in my portfolio, and you could choose that very much in a much better way in this. However, there are some cautions because they are smaller means there is less diversification, and it requires more judgment of your investment because these are more specific property specific things. And then the regulations are new, so we need to see how they evolve and grow and how the whole market shapes up. So thank you so much for watching the video and being connected with us. Thank you so much.